Good morning and welcome to Master Trader, where you can learn to use simple market and stock analysis to make money investing and trading. I'm Greg Capper. Today we're going to take a look at the broader markets that look like they are headed to the moon. So we're looking at the Dow futures here. They're up about, exactly 160 points at the moment. So the markets are going to gap higher this morning. So the question will be, can they hold on to that gap and continue to move higher? Well, even if they pull in, historically this year anyway, the buyers will be there on dips to make it go higher. And these futures look like the next stop should be 25,000. And then whether we see the cash market hit there, we'll just wait and see. But as this is acting right now, it's getting to the point of what we'd call near to a climactic kind of sell setup. And that's defined as prices accelerating to the upside, which leaves no support underneath, and then you get a bigger pullback. And so as prices do that, what we would see here in the coming days, so this is the type of setup that we'd be looking for, where prices go straight up. You'd get more bars moving in the same direction than just three with a climactic setup. And this one came out of a base that was about a month long. So we don't define that as climactic. And ideally, this one would have pulled back a little bit more toward the 20. That's the typical setup after a move like this. It didn't happen. It was very shallow and then continued to the upside. And then on Thursday, we had this red bar ignored, as we call it, an RBI. And that is bullish. When you see that, sorry for the writing there, pretty bad. Writing with the mouse isn't easy. An RBI, a red bar ignored, tells us that what happened there was intraday. Prices pulled back, buyers were there, and they pushed it right back up again. And so this was Friday, and there was a bullish close. And my partner Dan, I think he finally calls this a bull sandwich, meaning you've got two bullish bars on either side with a red one in the middle. So this was the bearish bar, and the bulls have it sandwiched, and then it's going to go higher. So now, to really make it climactic, we need to see it push up into, I guess, year end or the Christmas holiday there. Christmas is in another week, of course. And so this bullish pattern following through, if it begins to accelerate to the upside and goes vertical, that type of a pattern historically ends a trend short term, meaning you get a bigger correction, which could be sideways in the most bullish markets. But at that point, aggressive traders would be looking for short setups, looking for a pullback over the next several days, and then we see where it all goes from there. Now, as we look at daily patterns, we combine that with intraday patterns. And as I look at what's happening here, and this is a 15-minute chart that's happening right at the moment, this is not climactic. So even though the markets are gapping up 160 points, or the Dow futures are gapping up 160 points, this has been moving up in a very controlled manner and then just began to move up here. So this is not something that you would short as a gap up unless it broke down below this support here, because it's not moving vertically yet. So we look at the patterns as I explained to you on the daily time frame. We combine them with like patterns on intraday time frames to find high probability sell setups or buy setups. Now, a lot of positives this morning. Everybody's looking for the tax plan to come through and deliver the Christmas presents under the tree, as the president says. So let's see where this all goes, and we'll update tomorrow. Subscribe to the channel and learn to trade